Hello and welcome to Thank God It's Friday. Well, it has been a topsy-turvy week, but at least we've ended on a positive note. But to make sense of the market, today we are joined by Mr. Vibhav Kapoor, who is the Chief Investment Officer with IL&FS. Thank you, sir, for joining us, and I hope that you can make and help us, go through some of these problems that our markets are facing. And of course, my first question will have to do with demonetization. Now, there are also some numbers that are being put out there. We're looking at GDP cuts of anywhere between 1 to 3%. A lot of analysts are expecting the recovery in growth to be delayed by 2 to 3 quarters. What is your assessment of the impact of demonetization on our markets?
So short term, it's going to have quite a major impact. So this quarter is almost washed out in terms of expectations of earnings growth, etc. Anyway, we've not had much earnings growth over the last 2-3 years, so it's in that sense it's a pretty big disappointment. Even the next quarter, I think, is going to be much slower than what would have otherwise been. So I think for the full year FY17, you're going to probably end up with maybe 4%, 5% earnings growth instead of the 12-14% that people were looking for. But beyond that, in FY18, I think things should bounce back, and probably earnings as well as GDP growth should come back to normal standards. So to that extent, it's a short-term, I would say, influence rather than a longer-term thing. And in the longer term, it probably will have a lot of more positive influences rather than negative.
So when we talk about short term, everybody's been saying that the impact should last only in the near term. What does short term mean? 2 quarters, 3 quarters? What's your assessment?
Yeah, so that's I'm saying maybe for the next 2 quarters till March. So this quarter and the next quarter.
I believe that you had previously said that you expected Nifty to correct levels of 81, 82, 100 in the event of a Trump win.
Yes.
It has already tested those 7900 sort of levels. So what I want to understand is, do you see further downside, and what does the worst case scenario look like? Or if I put it the other way, at what levels do you think a strong conviction based buying will come back?
Yeah. So what's happened is these two events have happened simultaneously, the demonetization and the Trump victory, almost on the same day. And I think very naturally in India, people have been more concerned and concentrated their attention on the demonetization because it's a very major event and it's a local event. And a lot of even laymen can understand what's happening and so on and so forth. But as I said earlier, I think that is a relatively short-term thing. So maybe, as I said, 2 quarters, maybe worse 3 quarters, but not more than that. The Trump thing, which is global, I think is of much more consequence than the demonetization for the markets over the medium term, say for the next 12 months or 18 months. And, when I said earlier that a Trump victory would cause a correction to happen till 81, at that time actually the consequences of a Trump victory or the way the markets globally have behaved after Trump victory has exactly been the opposite of what people had thought actually.
Right.
So nobody had anticipated the dollar to run up, the US markets to run up and so on and so forth. So it's really been, and if you see when Trump won in the morning, all the markets were down badly. Yeah. Dow was down 1,000 points and so on, and then it recovered, and from there it just not looked back. So now you have to reevaluate what is happening. And I think the Indian analysts and the Indian, whoever investors are not giving that event as much importance as actually it's going to have the influence in the markets. So what I see is that if Trump lives up even to half his promises of cutting taxes and corporate tax in the US from 35 to 15%, allowing money to go back from outside at 10%, corporates have kept money outside, fiscal spending, fiscal deficit, and all those things. If he does that, I think a lot of money is going to go back to the US. It's already started. We can see emerging markets have had a big sort of drain of funds, both from bonds as well as from equities. And that is only going to continue and maybe accelerate if all this happens over the next 15 to 12 months maybe. And that's going to have a very detrimental impact on all emerging markets. And it's already started. We can see that. So it will happen in terms of currency depreciation, it will happen in terms of outflows of FII funds, and so on and so forth. And combined with the demonetization impact, at least for the next 6 months or so, I think the markets have a very tough time. Are going to have a very tough time going forward.
Okay, you've just said that the dollar is it's looking like it's only going to strengthen from here on, and of course that's going to have implications for the rupee. My question to you is, do you see the falling rupee playing a spoil sport to the 50 or 100 basis points repo rate cut that you were expecting from the RBI in the event of demonetization?
Yes. Yeah, I think that's a good question because too sharp a cut in the repo or the RBI rate is going to cause a further acceleration in the decline of the rupee. So already as it is, what's happening is the differential between the yields, the US yields and the Indian yields is narrowing very sharply. So we are down to 6.2 and they are up to 2.4 or something. So it's only about 3.75 the differential, which is maybe just about enough to cover a rupee depreciation. So if you have another 100 basis point cut here and there, they go up another 30-40 basis points, there's really going to be an outflow of funds from bond funds, etc., and therefore the rupee is going to come under more pressure. So yes, definitely, to answer your question, I think that's going to form a sort of a major point in the decision-making process of the RBI as to how much they can cut. So probably 100, I think, is something which they may not do because of that.
Okay.
So you did mention that our markets do face the danger of the outflows accelerating in the near future. What will it take for the global events, and what will it take for variables to change in domestically, which could bring back FIIs, and how long do you think it may take?
In the short term, nothing, because when such things happen, the FIIs tend to allocate money towards markets and economies where the currency is appreciating and the market is appreciating. So if you see what's happening is, and what's probably likely to happen is that money is not going to flow out from here, but money is also going to flow out from bond funds, even in the US, into equity, and that's already happening. So there's very little you can do about it in the short term. And anyway, you cannot sort of start to grow suddenly at 10%, 12% so as to stop that flow of funds. So in the short term, I don't think you can do anything. Over a medium term, of course, you can do a lot of things in terms of reforms and picking up growth, etc., which then will have an impact where money will start to come back. But it's more of an emerging market issue than a sole India issue. That's what we have to understand.
But do you believe that the increasing retail flows, into mutual funds via SIPs will in any ways offset, the dearth of foreign flows that have been coming into the
country? That's been a very good thing that's been happening in the last 2 years. We've seen a lot of domestic money coming into mutual funds. I think there is a sort of a permanent shift to some extent of, savings going into equity and going into mutual funds. And if fixed deposit rates come down further, as they are likely to, so that should keep the flow of money going into equity mutual funds at a strong pace. That's good. But what does happen is that if the markets start coming down continuously over a period of time, then investors do get a little bit hesitant, and that can reduce the flows to some extent, but hopefully they will still keep on investing.
Moving back to the Fed, I'll just take the question. Moving back to Fed, Mr. Kapoor, I believe a December hike of 25 basis points is something which the markets have already started pricing in, or probably have already priced in. How important do you think is the commentary going to be this time around in terms of the pace of hikes in 2017? Is that something that the markets will really focus on, and how important is that?
Yeah, it's very important, and I think the markets will focus on that because, as you said, the Fed hike in December is almost 100% priced in. So I don't think that's really going to be a matter of discussion. So the commentary is going to be important, but I'm not sure that the Fed is going to give you some very specific commentary in December, given that the new president is going to come in January. They would like to see what policies he actually follows, what deficit financing he does, what type of spending he does. So I think you're going to see some very ambivalent sort of commentary from the Fed saying, oh, we are going to be data dependent, we are going to see what the president's policies are, etc. So they are still going to leave the market most likely in a very uncertain mood.
So we're also looking at the union budget in a couple of months. What are your expectations and what implications does it have with respect to demonetization and bringing GST forward?
So I think that's the union budget is going to be very, very important this time again, especially because of this demonetization event. So there are still issues, unclear issues as to if the government does, if the RBI does save that money, 3 lakh crores, 4 lakh crores, whatever that amount finally is, whether that can be transferred to the government or not as dividend, etc. And there have been articles, some RBI governor saying it's possible, some saying it's not possible, some saying the law has to be amended, etc. So if they can do that, then obviously it will be a big plus. They'll have much more money to spend. They can recapitalize banks, they can spend more on infrastructure, they can give some SOPs, I think, to the public. So I think those SOPs should be coming definitely, because they also perceive politically that the people have had a hard time, and therefore you need to sort of give them some positive vibes so that they can start spending again a big way. So I would expect some fiscal stimulus of some type or the other, either through reduced taxes or through increased spending, or a combination of both. Some recapitalization for banks, but a lot, of course, is going to depend on what is the final sort of arithmetic and what is the sort of legal leeway that they get to transfer some of this money to the government.
That you're working with right now?
Of course, it's too early because 31st December is still far off.
Right.
Unfortunately, we heard so many things off the record that people are still managing to transfer their black money into white and so on. So you really don't know how much finally is going to not come back, and which is the value, which is so there were estimates of 3 to 5 lakh crores earlier.
Right.
But what we hear of the thing is a lot of people are managing to convert.
Right.
So let's see what the final figure is.
Right.
I believe it's too early because all the management interactions that we also have had, everybody was very unsure. There was a lot of chaos, uncertainty as far as that first 10 days were concerned, and a lot of people are really waiting for December first week to understand how collections come in, because the last time the demonetization, when it was announced, the November collections had already been made. So it's now only in December that you're going to get a clearer picture. So given the current situation, we know what's happening globally, we know what's happened in India, and about the GDP growth cuts that we've seen, or we are rather going to see. Where would you put your money now, global or domestic themes? Because it's a two-edged sword right now, but what will you pick?
I would keep a fair amount in cash, to be honest.
Okay.
The problem with global themes, you could put some money in global themes because they've underperformed earlier, like IT and pharma. But IT is suffering from a lot of its own problems, which have nothing to do with the demonetization or the domestic situation. They first got to do with IT itself as a sector, because the whole IT sector is getting completely a new business model with this cloud and digital computing, etc., which is something the Indian companies are finding it very difficult to adapt to, and it will take them at least 3 years to adapt to that, and then some of them will fall out of the way, some will do well. And secondly, of course, now you have this again, the Trump problem, because he's promised that he's going to relook at the H-1B visa program. He's going to make it more expensive. It is concerned. Of course, the rupee depreciation will help a little bit, but that's just a sort of a temporary thing. Pharma is okay, maybe a little better. Stocks have come down, so you could put a little bit of money there. Domestics, as I said, I don't know yet. It's too early to say. Both the impact of the demonetization as well as the impact of the global, dollar and the yields going up, etc. So all in all, it's a pretty uncertain situation right now.
So there are a lot of sectors out there which have the informal, part where you do not have a substantial amount of organization. I'm talking about the disorganized sectors. Which are those sectors which stand to benefit from a large contribution coming from the disorganized part out there? And is there an opportunity right now to move into such sectors?
Sure, I think FMCG is one such sector, which is where unorganized plays a big part, and some segments of FMCG at least, if not all of them. And this GST, as and when it's passed and gets operative, is really going to be extremely beneficial for the organized companies in these sectors, because the advantage of not paying tax, etc., which the disorganized sector has, will go away, and they will also have to come into the chain. So I think FMCG really is one sector which is going to gain substantially from that.
One sector which has really been sort of insulated from the negative impacts of any of the domestic or global events has been the metal sector. What I want to understand is, do you believe there is any strong evidence of change in the demand economics which justifies the kind of moves that some of these metal prices, the way the metal prices have moved up, and again, does that kind of generate any enthusiasm in that sector for you?
Well, one thing is that always, particularly in commodities, prices tend to overshoot both ways. So that's why you have seen such a huge, fast rally. For example, copper went up some 40% in 10 days, etc., and so on. So that always happens by the very nature of commodities. So they overshoot, then of course they'll correct back, and then they'll assume a sort of a linear sort of path over a period of time. So having said that, you can expect corrections to happen, but I think the way things have moved, the bottom for these commodities has already been set, and you are, I think, now in a secular up move. Now, why is that happening? I think three reasons. One is, of course, that over the last 5 years, 6 years, when the bear market in commodities was going on, gradually supply has been taken off the market, new expansions have not happened, etc., investment has not come in. So there's been a slowdown in the growth of supply. Secondly, China which has been the biggest consumer, obviously, has sort of stabilized their economy now. There were other earlier fears of hard landing. They were slowing down very sharply. Now they're sort of stabilizing at between 6.5 and 7% GDP. They've given some stimulus also, so the demand from there is stabilizing. Third, of course, is still speculative, but again, that is back to Trump, since he's promised a large spending in infrastructure and manufacturing. Now that, whether it happens, how much it happens, we'll have to see. So I think that's going to be the deciding part. If that happens, then I think metals are still in for some much bigger rises than they have right now. If that doesn't happen, then you'll probably see some large corrections taking place, but that's something which will unfold itself over the next 1 year or so.
How would you play the metal?
So I would say on correction, yes, on correction right now, as I said, they probably overextended themselves in the short term, but on corrections, I think one should be giving some allocation to them, yes.
So we're looking at conflicting views coming on the discretionary sector, and I'm talking about autos and consumer durables because they're heavily financed. About 80 to 90% of the auto sector is financed. But on the other hand, we're also looking at expecting weakness in the two-wheelers because that's where you have most of your transactions in cash. What is your view on the consumer discretionary space right now?
So automobiles overall, I think is still a good sector, at least comparatively. If you talk about any of the other sectors, I think that's one of the strongest sectors. So cars probably is not going to have much of an impact except for a month or two. Two-wheelers maybe a little bit longer, but I think over the next 2 quarters that should pick up again. I don't see any problem. So amongst all the sectors, if you are only talking about the demonetization issue, then I would say automobiles and FMCG would be the two sectors, I think, which will do relatively much better in FY18.
So how would you approach some of the NBFC companies now, and if we actually break them up into subsections or sectors like microfinance companies, housing finance companies, consumer finance companies, some of these had corrected sharply but have seen some bounce back. So how do you approach some of these?
Interesting point in this whole discussion, and that is that while we've been talking about market going down because of demonetization or going down because of Trump or global. There was one other big reason for the market to go down, and that simply was overvaluation, nothing else. It was looking for an excuse. So now when you talk about NBFCs particularly, that's why, that makes me think of this. And, there were NBFCs trading at 12 times book, 14 times book, 16 times book. That's ridiculous. It's absolutely ridiculous. Nowhere in the world do you have that, or neither are they growing at that rate of, for an NBFC to trade at, say, 12 times book, you would probably need an ROE of 300, 400, 500%. So they were absolutely ridiculously overpriced. And that is why you've seen one of the reasons why you've seen such a sharp correction. If they had not been so overpriced, the correction wouldn't have been so sharp. Even now, some of them, after the correction, are trading at 6, 8 times. Not all, some of them. They are completely overpriced. And, why NBFC? Cement companies. Cement companies are trading, analysts, I think, have gone out of there. They've, from P ratios of 12, 14, 15, 16, they've gone to EV/EBITDA of 14, 15, 16. So they've just changed their nomenclature of valuation. And P ratios in cement companies at that time, particularly the market was high, were 40, 50, 60. That's ridiculous. And the cement companies are actually utilizing only 70% capacity. They are not able to utilize because there's no demand. And for 3 years we've been saying, there's going to be 12% growth, 50. This never happened. So the short answer is that all of these, particularly the mid caps, were extremely overvalued, a lot of them, and therefore they are correcting. And now with this sort of momentum having broken, it's going to be very tough for them to go back to those levels for a long time.
So you're not particularly excited about NBFCs? So
there'll be some NBFCs in some sectors, say housing, for example, or ones which are reasonably priced. Say, 1.5 times book, 2 times book, depending on their ROEs. Yeah, those are fine. I mean, those will probably, after 3 months, when their business again starts to pick up, they'll do well.
I don't have any more questions. All right, thank you so much, Mr. Vibhav Kapoor, for joining us. I hope that gave you a lot of clarity in terms of what is going on and how you can probably understand how some of the sectors are impacted. But that was all for today's session of Thank God It's Friday. We'll see you back at the same time on next week. But till then, have a good time and stay tuned to Bloomberg.